Charlie Munger's early life laid the foundation for his multidisciplinary approach. Born in 1924, Munger was deeply influenced by his father, a lawyer, and his grandfather, a federal judge, who instilled in him a love for learning. His studies at the University of Michigan and Harvard Law School exposed him to diverse fields, from physics to psychology. These experiences taught him that true wisdom comes from integrating knowledge across disciplines, a principle that would later define his investment philosophy. Munger's concept of mental models revolutionized decision-making. He believed that understanding fundamental principles from physics, biology, and psychology could help investors avoid cognitive biases. For example, he applied the inversion model, thinking backwards to identify potential failures to avoid poor investments. His lattice work of mental models, inspired by Charles Darwin, emphasized that wisdom is not about memorizing facts, but about connecting ideas across fields. Munger famously said, "It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid." Instead of chasing high-risk, high-reward opportunities, he focused on minimizing the stakes. This principle was evident in Berkshire Hathaway's investments, where patience and discipline outweighed short-term gains. Munger's approach underscores that avoiding errors is often more profitable than seeking genius. In his seminal speech, Munger outlined 25 cognitive biases that distort decision-making, such as overconfidence and social proof. He argued that understanding these biases is critical for investors. For instance, herd mentality often leads to market bubbles, while confirmation bias blinds people to contrary evidence. Munger's insights into human psychology remain a cornerstone of behavioral economics. Munger's mantra, "The big money is not in the buying and selling, but in the waiting," highlights the power of compounding. He and Buffett built Berkshire Hathaway by holding investments for decades, allowing time to work its magic. For example, their early bets on Coca-Cola and See's Candies grew exponentially due to patient capital. Munger proved that long-term thinking outperforms short-term speculation. Munger was a voracious reader, consuming biographies, scientific journals, and history books daily. He believed that going to bed a little wiser was the key to success. His habit of synthesizing knowledge from disparate fields, like using evolutionary biology to understand market competition, showcased his commitment to lifelong learning. This curiosity fueled his unparalleled investment acumen. Munger's collaboration with Warren Buffett transformed Berkshire Hathaway from a struggling textile company into a global conglomerate. Their synergy was rooted in shared values, integrity, rationality, and a long-term perspective. Munger's influence pushed Buffett beyond cigar butt investing to focus on high-quality businesses with durable moats like Geico and Apple. In 1972, Munger convinced Buffett to acquire See's Candies for $25 million, despite its seemingly high price. This decision exemplified their shift to valuing qualitative factors, like brand strength and pricing power, over cheap valuations. See's generated over $2 billion in profits, proving that wonderful businesses at fair prices outperform fair businesses at wonderful prices. Munger's wisdom extended beyond investing. He mentored countless entrepreneurs and thinkers, sharing his worldly wisdom through speeches and writings. His 2007 USC commencement address, The Psychology of Human Misjudgment, remains a masterclass in critical thinking. Munger's legacy lives on in those who embrace multidisciplinary learning and rational decision-making. Munger's parting advice was simple: acquire worldly wisdom and adjust your behavior accordingly. His life demonstrated that success stems from humility, curiosity, and the courage to think differently. Though he passed in 2023, his principles, compounding knowledge, avoiding biases, and thinking across disciplines, remain timeless guides for investors and lifelong learners.